The Indian rupee has extended gains for a second straight session. The currency appreciates to 59.21 in the intraday market, which is a fresh 10-month highs for the currency. The investors are now waiting the election verdict in the markets tomorrow. On your screens, the closing has been 0.6% on the higher side. 59.29 is where the rupee shut sharp. Let's get on board then. Vijay Bhamwani, who's author and CEO at BSPL India. Also joining us is Samiran Chakrabarti, who's Regional Head Research India, Standard Chartered Bank, and he joins us for an expert take on currency as well. To you first, Vijay, and what is your sense? The rupee seems to be gaining quite strongly. The markets, of course, are momentum driven, and elections result is what we await.
Absolutely, Manisha. The election results are the major domo trigger for the currency as well as equity commodity markets combined. I think what you are likely to see is a continued but gradual strengthening of the rupee in the run-up to the election results. As and when election results are announced, if the market's expectations are met, I think 58 is a level that I would watch out for. Any appreciation or steep appreciation beyond that level seems a little unlikely at this point in time. So as we stand, I would not like to give anything more than 2% appreciation to the rupee from where we are right now.
But Vijay, are you looking at those kind of levels as early as tomorrow? Because that is when the election results are. We are expecting a choppy market. How would you also look at the volumes now?
Manisha, where the volumes are concerned, we are clearly seeing volumes go up in all the pairs except the euro. And the fact that a relatively illiquid contract like the JPY INR also has seen a steep bump up in volumes tells you that the markets have already started playing for the election results. Not only the volumes, but in the currency segment, even the open interest in the USD INR and JPY INR have gone up. So traders have already started second guessing the elections and have started building positions. If and when expectations are met, I think the election results would have been fairly largely discounted into the price, and therefore I say that the 58 level is what I would give to the rupee as a maximum appreciation scope, because thereafter any appreciation will actually eat into the export potential. And whether 58 can come tomorrow, yes, I don't think the rupee has kind of disappointed traders where intraday volatility is concerned. There have been times in the last calendar year when 1.5 rupee per day in terms of intraday beta has been the norm. So that could very well repeat itself tomorrow also.
All right, so getting ready for a volatile day tomorrow. Samiran, what's your sense really coming in for the markets? The kind of run-up that we have seen, do you see that kind of volatility and that kind of an appreciation tomorrow?
Well, clearly, tomorrow is the D-Day when there would be some volatility for sure, especially given the fact that we might not know about the exact outcome till late in the day. And there could be choppiness if the trends keep on changing. Let's accept that with the exit poll outcomes, now the hurdle rate to beat to surprise the market has now become much larger. So probably only around 270 plus seats will give additional comfort to the markets. So since that hurdle is now higher, you could expect choppiness tomorrow. But I would still expect the broader trend to be on the appreciation side.
Samiran, would you say that much of what the markets seem to be doing, especially the rupee, is sentiment driven and there's not really much change when it comes to fundamentals?
Yeah, the fundamentals have been improving on the external sector for some time now. If you look at it, current account deficit has come down very, very substantially from 90 billion to 35 billion. So clearly that would mean that the capital inflows that we require to fill that gap is now much lower. So in that sense, whatever capital inflows we are getting, we have got say about 600 odd million in the last 4 days. That itself is good enough to keep that appreciation pressure intact. So what I'm saying is that part of this is definitely sentiment driven, but part of this is also flow driven. And then that flow is helping rupee immensely.
Samiran, while there were reports of exporters coming into the markets in large numbers and importers really staying on the sidelines, I mean, clearly they are expecting more appreciation coming in for the currency. But looking at the current scenario, would you look at higher volumes? I mean, RBI has been trying to hold on to 68. They have been buying dollars into the market as well. Even then, we have seen the rupee appreciate.
Yes, if you look at it, last 1.5 years, exporters have been mostly on sidelines with very low hedge ratios. So clearly because the risk was that in the election you could get something like a hung parliament. So even if you associate some kind of 10-20% probability of a hung parliament, you would probably keep yourself unhedged for a large part of your foreign earnings. So those exporters might just now panic and come and sell in the market. So that could add to appreciation pressure. And on the other hand, importers might go into that wait and watch mode, particularly with forwards remaining elevated. Now the challenge for RBI really is that if it's intervening in the spot, then how to mop up the rupee liquidity that they're creating, because with inflation fears, they don't want the liquidity being sloshing around. So in that sense, they're also paying in the forwards, and that's why forwards remain very high. So this kind of combination of spot intervention along with forward paying, how long can this continue is a big question, because otherwise RBI will have to start thinking about either a CRR hike or an MSS bond issuance kind of thing to mop up liquidity, which is probably slightly longer term. But if we keep on getting this kind of flows, then possibly RBI will continuously keep on shifting their stops on the currency, and you will see a staggered appreciation rather than a very sharp appreciation.
Well, as the markets clearly are watching out for those numbers, the other asset classes would be in view as well, Samiran. But, there was a scenario once last year where we saw the rupee continuing to decline. There was no level. We saw up to 68 as well. Do you see that kind of a scenario as we see the sentiment improving? Or would you say that tomorrow, of course, it would be a spike up onto the currency depending on how we see the numbers, and then we will start taking stock of the fundamentals?
Well, if you think of it from a central bank's perspective, intervention is always an asymmetric game. It's more difficult to intervene when the currency is depreciating, while it's relatively easier to intervene when the currency is appreciating. So if the outcome tomorrow is a positive outcome, then it's a matter of choice for RBI to let the currency appreciate. So it can decide that it will tolerate 1% appreciation or 0.5% appreciation, depending upon what their comfort level is. They can guide the market towards that direction. So from that sense, I do not expect a runaway appreciation to happen tomorrow, regardless of the election outcome. I would expect RBI to temper the appreciation to some extent, but we think that finally we are headed towards about a 58 mark if the election outcome tomorrow throws a very decisive government.
All right, so that's a positive voice really coming in, Samiran. We will let you go at that. Thank you so much for joining us with your view on what we can expect in the currency markets on the D-Day tomorrow, as we watch out for those election result outcome as well.